Interesting thing about having an edge in trading is that whether you have an edge or not, or you don't have an edge, either way, okay, whether you have an edge or not, either way, your outcome will always be random. Okay, your outcome will always be random on a trade by trade basis. So whether you have a very powerful edge or you don't have an edge at all, your outcome will not be different from just blindly entering the trade. Okay, so let's say for example now this trade that I just took here now this morning, you can see right there, my edge on that trade is just the pattern that I will show you guys now. You can see this is a pattern, right? And whenever this pattern forms, usually market goes down. After the retest, it goes down twice the length of the pattern. Okay, that's the edge, right? Now the most interesting thing about this pattern is that I'm trading it at a resistance area, right? That's what gives me an edge. The pattern itself is not giving me an edge, it's just giving me a place to put my entry, my stop loss, and my target. But what's actually giving me an edge is this resistance here. Now if this resistance was not there, and I take this trade, if I take this type of trade many times, what happens is after the effect of luck cancels out, okay, after many trades, after you take many trades, let's say 30, 50, 100 trades, right, the effect of luck or the effect of randomness will cancel out. Okay, you will only make money after, if you place many trades, you will only make money if you have an edge. Okay, so after many trades, now if I take this trade without this resistance there, what will happen to my equity curve? It will fall. It will be falling like that. Okay, or it will not rise. It will just probably be stagnant or falling. So if I want to experience an upward rising equity curve, I must only always take this setup around an area of resistance. That's what gives me an edge. But the problem is that if the when you place your entry, right, the outcome it will produce will not be different from just randomly entering, like blindly entering. The outcome it will produce, one will produce now, will not be different from the outcome it will produce if there was no resistance here, or if you just close your eyes and click buy or sell. So that's why trading is very difficult, okay, because on a trade by trade basis, you never know what will happen. Okay, anything can happen. It can go down, it can go up. But on the long run, after the effect of luck or bad luck plays out, okay, after the effect of luck or bad luck cancels out, the equity curve will start rising that way. This is why you need to trade in sample sizes. So you need to structure your trade in such a way that after it cancels out luck, your skill will show up. So this is why you trade in sample sizes. Otherwise, if you just want to trade randomly, if there's no resistance there, the only way to make money, you want to trade this pattern without that resistance. If you want to make money, is to full margin here. Okay, because then your probability of winning is 50-50. Okay, it can go up, it can go down. So without that resistance, the only way you can make money is by totally gambling it. Okay, so if you are lucky, it goes down, it hits your target, make twice your account. So if you deposit, let's say $100, you make times 2 of that, that is 200. So that's the only way to make money if you have no edge. Because if you have no edge, long term, if there's no edge there, long term, you are going to blow your account. Okay, using money management. If you use money management and you have no edge, it's 100% guaranteed that you are going to blow your account after many trades, after the effect of luck cancels out. Okay, So you see some people trading, even though they have no edge, they are applying money management. It's a recipe for disaster, because long term you are always going to blow your account. Better you go and trade demo when you know there's no edge. Okay, trade demo until you have an edge, then you can trade live. That's the best way to go. Don't trade live with when you are still trying to find your edge. You're trading live account. So that is it. What I'm trying to say is that trading is very difficult, because the outcome of your trade, like I place this sell now, I don't know whether it's go down towards my target or it will go up that way. It's still the same outcome as if I have no edge. Okay, but after many trades, after let's say 50 trades, what happens is my equity curve will just be rising that way because of that resistance. Because I always traded around that resistance. Okay, and that's what gives me an edge. So that's it. So edge is a little bit hard to explain to sometimes. It can be a little bit difficult to understand what an edge really means. What it means is that there are there are what it means is that there are when people start selling here, or a lot of other traders, because there's resistance there, a lot of other traders will see that resistance and they will keep selling again, and the market will go further down. If that resistance is not there, usually it will go a little bit in your way and jump back up, because there's no other people to jump in to make you profitable. Okay, to make it 2 times your risk or 3 times your risk. Okay, because of that resistance, that's what gives you an edge. It's not because you are able to predict the markets accurately. It's because of all those people that will see this resistance and will jump in because of that. That's what gives you an edge. Okay, so edge is a little bit hard to explain. Edge does not mean you your trade must hit take profit. Okay, it's not dependent. It doesn't mean that your trade will hit take profit. It means that if the market wants to go down, okay, it means that your risk reward at that point will be larger because of this major resistance here. It means that if market wants to go down, other people will jump in because of that resistance, and it will then tend to push markets a little bit down your way. It's the same thing as trading with a trend. If you are trading with a trend, your risk reward tends to be a little bit higher. Okay, a little bit higher than trading in a range or counter trend trading. Okay, so that is it. So that's what an edge means. Edge does not mean that you are always going to win. Edge means um, you know after many trades, after the effect of luck has cancelled out, you experience an equity curve that looks that way. Okay, so that is it.